Later this week, we'll hear from Agricultural Bank of China, Bank of China, and ICBC. Meanwhile, we had the former deputy head of the PBOC said this morning that major Chinese banks could see shortfalls of as much as $78 billion in the next 5 years due to the new Basel III requirements. Those comments really hitting Chinese shares of Chinese banks hard today. What do you make of this rout? Philip Chan, director of Shenyin Wanguo Securities, joins us. Philip, what do you make of the sell-off in the Chinese banking stocks today?
Well, it's not too surprising. I mean, in the sense that most of the news recently has been either neutral or negative on the banks. I think one thing, though, that you've got to be clear about is that the Chinese banks have actually been out of favor for quite some time, apart from just very slight blips during the year. And but you see, all of the bad news, the capital raising and this Basel III issue, have actually been known about for some time. So we think that whilst yes, you saw a sell-off today, but there's got to be a point when people will start to see the value coming through on the Chinese banks, because a lot of them are very focused on the domestic economy, and so to a certain extent are insulated from what's going on internationally.
Philip, if one looks at the way in which the Chinese authorities have been acting to try and restrain inflation here in Asia and in China specifically, they've obviously been using a variety of measures, interest rates and also statutory reserve requirements on the part of the banks themselves.
Yeah.
Do you think we're coming to an end of that? And if so, that must be a fairly positive potential signal for the banking sector in China as a whole.
Oh yeah, no, we've been sort of saying, I mean, of course today was another issue, but today's sell-off was another issue. But the thing is, we've been saying that the banks are have been looking cheap since the beginning of the year. And as I said, the capital raisings, the Basel III requirements, the local government loans, all of these issues have more or less passed. And we don't think that there is substantial downside related to these issues going forward. So they've got to look very good value right now.
Philip, I'm glad you brought up the issue of local government debt, because we are still talking about it. I don't think the issue has been completely washed away. I mean, people are still wondering the extent that the banks have, the exposure that local banks have to these local government debt. How do we know for sure that they're not that exposed and that the risk is contained? Do we know?
You don't know for sure, no, but until you see something definitive. But the thing is, I think that the government has been leaking this information out through various means over the last few months, that we're getting close to, I think, a real sort of exposure. And I think in international terms, it's still fairly containable, and also is reasonable. We've sort of kept saying about the banks that even if they had NPLs approaching like 5% in the next few years, I'm talking about in the next few years, not in the next few months. I mean, that would only be approaching what international levels are right now. So we think that it's all sort of like reasonable in the context of, say, how China's economy is growing.
Do you expect to have those that level of non-performing loans?
We don't expect that they will be, signaling 5% of NPLs in near term. But we think it's probably realistic that I think the official level is something like under 2% at the moment. I mean, it could be approaching maybe 3.5% within the next 1 to 2 years, I think.
Philip, before we let you go, you in your notes you said your overall investment outlook for the Chinese equity market is still pretty much positive. What would you be buying in China? Which sectors? Tell us about that.
Well, no, we've been positive on those sectors which we see some structural, sort of like imbalances, because the government is actually trying to control supply. And so these are mainly commodity related. So for instance, like electric, aluminium, steel, cement, even to a certain extent, some of the consumption areas. So these are the areas that we'd be looking at.
All right, Philip, we'll leave it there. Thank you very much for talking to us today. Philip Chan, Director of Shenyin Wanguo Securities.